If you want to become wealthy, you have to invest your money. That secret is out. But in this video, I'm going to be going over some of the secrets that you need to understand if you want to build wealth with stocks and real estate. What's up, everybody? I'm Jaspreet Singh from theminoritymindset.com, where money minds rethink rich. The stock market is a place where you can go and buy shares or ownership in some of your favorite companies. Amazon, Chipotle, Lululemon, Amazon. When you invest in their stocks, you get to own a piece of the company. That way when they make more money, so do you, because the stock price goes up. When you invest in real estate, you're buying physical properties. Like you can go out and buy a home, and then you can put a tenant in that home, and every single month, this tenant will pay you rent for living in your property, and now you have a cash flow producing asset. Now here's the thing, while these things sound nice, it's not always as easy as it sounds. I mean, everybody likes the idea of owning their favorite company, but why is it that so many people lose money in the stock market? And everybody likes the idea of having rental properties, but why is it that so many people cannot manage rental properties, or at least can't do it profitably? That's why in this video, I'm going to be going over 5 things, 5 secrets that you need to understand. But before I get into that, I need you to do me a quick favor and smash the thumbs up button below. And a quick word from our sponsor, Fundrise. If you are interested in investing in real estate, but you don't want to deal with the headache of managing a rental property, you don't want to deal with tenants, you don't want to deal with contractors, then you can invest in crowdfunded real estate with as little as $1,000. And if you want to see how you can get started, I got the link to how you can do that with our sponsor Fundrise in the description below. The first thing you got to understand is the importance of money conversion. So anytime I go to India to visit my family, the first thing I do is I go and I convert some of my dollars to rupees, because in India, people do transactions with rupees, not dollars. When it comes to you building your wealth, you have to convert your money, your dollars, into something that is going to make you more money, because the reality is the dollars that you have, the dollars that you work so hard to earn, and the dollars that you save in your bank account are losing value to inflation, because as more and more money is printed, the value of each dollar that you have gets diluted. So what you want to do is you need to be converting some of your dollars, your paper dollars, into assets, investments that will make you money. So in this case, we're talking about stocks and real estate. And the thing that you need to understand here, so I'm going to assume that this side of the equation is your stocks and real estate. These are your assets. So what you want to do here is you make your EI, your earned income. This is the money you make from your job or the money you make from your business. And you want to take as much of this money as possible and put it here towards your PI, your passive income investments, because this is the thing that will make you wealthy. What wealthy people do and financially educated people do is they take as much of this money here and they put as much of it as possible here, because this is what is going to make you wealthy, not this. Doesn't matter how much money you make. I don't care if you're a doctor. You will never become wealthy just with the salary you make from your job, because as soon as you stop working, you stop getting paid. So what you need to start doing is, as soon as you get paid, you need to start transferring this money here towards your passive investments. That way you can start making money without having to physically go to work. Because if you want to become wealthy, your money has to be generating you money. Because if you have to work every single day in order to fund your lifestyle, you are not wealthy. You have no freedom. The reason I'm talking about this right now is because for any of the things that I'm about to talk about to work, you have to have the money to actually invest. And now how do you get that money? Well, now when you get paid, you want to take as much of this money as possible. I like to say a minimum of 15%, but the more the better. You want to take as much of this money as possible and put it towards your investments. In this case, stocks and real estate. I'll talk about that in just a second. But this is why it's so important, because you're never going to build wealth with this. You're going to build wealth with this, as you want to convert as much of this here as possible, because this money, even if you just save it, is losing value and is making you poorer each and every day, because the value of your dollar is dropping while the price of everything else keeps going up. That's why you want to move this money here, because this is going to make you wealthier, this is going to make you more money, and this will happen on the side without you having to physically go to work or do something to get paid, because you're putting your money in the right places that's going to pay you for owning it. If you are a newer investor or you haven't started investing yet, this concept is going to seem weird, because it doesn't make sense how you can make money without getting paid. I went through the exact same thing. I didn't grow up learning about investing or passive investments or stock market investing or real estate investing. I just thought that if you wanted to become wealthy, you need to get a better degree. That way you can get more money here. You can get a better job so you can make more money. But when I started investing in real estate for the first time, I bought a small condo out of foreclosure and I rented it out for $600 a month. This was the first investment that I made here ever. And this condo, after paying all of my expenses, was putting like $250 a month into my pocket every single month, and I didn't have to do any work. I had a property management company handling all the day-to-day stuff, and every month $250 was being deposited into my bank account, and I didn't have to do anything to earn that money. That was when the gears really started to turn in my brain, because I never knew that you can make money without physically having to go to work or do something to get paid. I didn't know that your money could be the one making you money. And this is what you got to understand, that wealthy people work on making their money here, while broke people focus on just growing this. Yes, if you have more money here, that can help you grow this, but what you have to remember here is you want to take as much of this as possible and move it here. That way you can become wealthy. It doesn't matter if you make $25,000 a year or $250,000 a year. You can start with whatever you can. Take as much of this and move it here as possible, because when you can build this, you will be wealthy. It's not going to happen overnight. This is something that's going to take time, but you need to start by taking some of this, the money you make from your job and your business, and move it here. That way you have these passive investments that will pay you forever. The second secret that you got to understand is equity. So when most people think of equity, they think of their homes. I own a home that's worth $100,000 and I owe $80,000 on my home, so I have $20,000 equity in my home. But when it comes to investments, this becomes just as important, because if you don't have any equity in your investments and things go wrong, which they will happen. The thing is about stock market investing and real estate investing, things will go wrong. Sometimes the economy will go down. Sometimes the stock market will crash. Sometimes the real estate market will crash. And sometimes your tenant's not going to pay you, or the company that you're invested in is going to struggle. And so you got to understand that things will go wrong. And if you have no equity in what you're doing, then you have no margin of error. And if things go wrong and you have no equity, now you're going to be the one paying the price, and you're going to be the first person to lose your shirt. Now, if you spend any time at all on the internet looking for ways to become wealthy through your investments, by now you're probably getting ready to type, "But just breathe. I've heard of so many people becoming rich with no money down real estate and by using high margin investments in the stock market." Let me start by talking about no money down real estate, okay? The way no money down real estate works is kind of like this. So there's this home right here, and this home, let's say, is worth $100,000, and the bank is willing to loan you $80,000. Now, you have to come up with the other $20,000 somehow, and you can take this $20,000 from your own personal account, or if you don't have $20,000, you can go to the seller of the home. So let's say this is the seller right here, Madame, a nice mustache. And so the seller says, "Hey, you know what? You seem like a trustworthy person. How about I loan you the other $20,000? So now the seller loans you $20,000, the bank loans you $80,000, and you buy the home with next to nothing. Sure, you might have to pay the closing costs, you might have to pay some other renovation costs, but in general, you're buying this home with very little money, with the hopes that now someone else, let's say this tenant right here, is gonna move in and they're gonna pay you rent and they're gonna cover all your costs. In theory, this looks great. You have very little money out of pocket, and if the numbers work out, you're gonna have some profit coming into your pocket every single month, and you had to put up very little money. But here's the reality of how this works. When the economy is growing, and when home prices are appreciating, and when tenants have money to pay rent, this is good. So when things are good, you can make money doing this. But as soon as things slow down, you are going to be the first person to not have money to pay your bank because you have so much debt on your property. You're going to be the first person to not be able to renovate your property and make the property nice when tenants want a better home. You are going to be the first person to go bankrupt or file for foreclosure when a tenant damages your property and you don't have money to make the renovations. These no money down deals are good sometimes. Yes, they have made some people rich, but do you want to know something else? These no money deals have also made me a lot of money, because when this person buys this property with no money down and then something goes wrong and then the bank has to take the property away from you and they sell it to an investor for a below market price, that's when I come in and I buy the property because you were not able to take care of your investment property. So yes, no money down deals can work, but they come with their own fair share of risk. And if you have never invested in real estate before and you don't have any savings cushion, then you are going to be the first person to lose your shirt when things go wrong, and then somebody else, a more savvy real estate investor, is going to come in and they're going to buy that property off of you for pennies on the dollar. You see the exact same thing happen in the stock market. You'll see people offering these classes on how you can get rich trading options and doing day trading and doing this other short-term trading where now you're trading with 10x margins. So you invest $1,000 and then you borrow $10,000 from your broker, and now you can invest with so much more money than you actually have. And when things are going up and the market is growing, it's no problem because everybody's making money, and now you're making money hand over fist. But as soon as things slow down and things start going down, now you're going to be the first person to lose everything, because now not only did you lose everything that you have, but now you owe your broker money that you don't have. So the thing that you have to understand about equity as an investor is if you take on more debt, yes, you can make much more money very quickly. That is a fact. But it also comes with more risk. So if you have never invested your money before, or if you do not know what you're doing, then you're taking on more risk without the experience. So that's something that you got to understand. Yes, it is possible. You can make a lot of money doing this if you have cash reserves and if you know what you're doing. But if you don't know what you're doing, then you got to understand you're taking on a lot of risk without understanding what you're doing. And the second thing that I want you to understand about equity as an investor is if you want to build wealth for the long term, you have to plan for things going wrong. One of the ways you can do that is by having some equity in your deals and having equity in your investments, because now you have a margin of error. Because guess what? Things will go wrong. The market will correct. I don't care if you're talking about the real estate market or the stock market. Things will correct. Things will go up, things will go down, and you want to be able to weather whatever happens. And the best way to do that, or one of the best ways to do that, is just by having some equity in the deals, meaning some of your own money in the deals. So you're taking some of your earned income, putting it to your passive income here with real estate or stock market. That way when things do go down, you have equity to protect you. The third secret, which really should not be a secret, is if you want to become wealthy, you got to understand the game and you got to keep learning. I mean, we have a lot of new investors entering the market right now in the real estate space and the stock market space. And the thing that always kind of concerns me is when someone starts investing their money, but they have no idea or no plan on how to invest their money. And now they go out and they start teaching people on how to invest their money just because this one person has made their first $10,000 or first $100,000. And the thing you have to understand here is that when the market is going up, it is very easy to make money. Anybody can make money in a bull market, because everybody thinks they're a financial genius when the market is going up. But the real test of who's a good investor and who's not is what happens when things turn around. And so this is where you got to understand the game and you got to keep learning, because this education is what's going to help you build wealth over the long term. I'm going to talk more about that in number 4. But you got to understand how the game works. I'm going to start with real estate, then I'm going to go to the stock market, then I'm going to go back to real estate, and then go back to the stock market. You'll see why I'm going to follow that order in just a second. But here's how it works in real estate. Let's say you buy this home right here. I'm going to stick with the example where you paid $100,000 for the home. And now your goal with real estate is cash flow. You want a cash flow producing asset, which means you're gonna make money every single month from rent. So in my area, I'm looking for a 7% return, which means here I'm making $7,000 a year in profit from this property, assuming I had to put in $100,000. So I put in $100,000, and every single year I get $7,000 a year in passive cash flow from this property. In the stock market, it's a little bit different. In the stock market, I'm looking for appreciation. So I might invest in this company right here, Company X. Now you could put in whatever company you want. Chipotle, Apple, it doesn't matter. You are putting your money in this company with the hopes that this company is going to use their money smartly and they're going to become more valuable. So you're going to hope that this company makes a bigger profit, they make bigger revenue, they create more products, and that this company makes more money. If this company makes more money, then the stock price will hopefully go up because more people will want to invest in this company. And if you have more demand for the shares of the stock, the price of the stock goes up. And now you just made more money because your stock price went up. So here we're talking about appreciation. Here we're talking about cash flow. Now, there is ways to make cash flow on the stock market side of things. If you invest in dividend paying stocks, So some companies in the stock market have a lot of cash, and these are your bigger, more mature companies. So companies like Apple, Verizon, AT&T, these companies, at least at the time of recording this video, are very large, and at the end of every year, they have a lot of cash sitting in their bank account and they don't know what to do with it. So one of the things that they do in this case is they just give this money away to their shareholders, people like you, in the form of dividends. So here, every 3 months, you get a check from these companies just for investing in them. So there is a way to get cash flow in the stock market through dividends. But in general, when people talk about investing in the stock market, they're looking for appreciation. When we're talking about real estate, people are talking about cash flow. So this is the investing side of things. But there's also a way to be a trader both in the stock market and the real estate market. Going back to the same example, let's say now you bought this home for $100,000 and then you put in another $20,000 of renovations. So you upgraded the kitchen, maybe you upgraded the bathroom, and now this home is worth $150,000 and you sell it. Now, you are no longer an investor because the definition of an investor is you're holding on to a property for the long term, which typically is a minimum of a year. Here you want to get in and out as fast as possible. You bought the home, you did your reservations, and now you're flipping it, and you made good money. You made $30,000 in this case. You got to subtract your expenses, your closing costs and all that. But in this case, you're making like $30,000 just by flipping this property. So this is not investing, it's a way of flipping. You see the same thing in the stock market. So in the stock market, you can buy a stock and you own it for 20 minutes, you own it for 2 days, you own it for 2 months. And so you're buying the stock with the hope that it's gonna go up quickly, that way you can sell it for a quick profit. This is trading. This is not investing. And so this is where you got to understand the game. And you see this more often here with the stock market than real estate. But a lot of people don't understand why they're buying or what their strategy is. Because you have to understand, what are you doing in the stock market? What are you doing with your money? Are you looking to make money over the next 10 to 30 years? Or are you looking to make money in the next 12 months? And so you have to have a strategy. And when you go in, you have to be willing to stick with it. Because what happens to a lot of people is they come into the stock market and they think, I'm going to be a long-term investor. I find a few companies that I like, I invest in them because I believe in these companies. 6 months later, something goes wrong, my company's down 5%. Now I panic and I sell. And so you went from being a long-term investor to being a trader because things didn't work your way. And so you got to have your strategy in place. You got to understand the game. I put game on the inside of this, but it's supposed to be on the outside. But you got to understand the game. How are you looking to make money? And even within this, there are so many strategies to trade. There's day trading, there's swing trading, there's momentum trading. So you got to understand, what are you looking for? And you can't just be flip-flopping strategies, because most people's strategies when it comes to investing money, especially in the stock market, is I'm going to put my money in what I like and hope that I make money. Hoping you make money is not a strategy. You got to understand what your strategy is before you put your money in. And this is the mistake that so many new investors make, because they're just looking to make money quickly, or they're just looking to make money. And as soon as things go wrong, they panic, they switch strategies, and things just flip. So if your goal is to be a long-term investor, then what you need to be doing is you got to find the right companies or the right ETFs that you want to invest in. And now you got to be listening to the earning calls. And if the company or the fund that you invest in is continuing to produce value and you continue to believe in it, you should continue to hold on to your investment. And even if things go down, the only thing that you should be doing is buying more, because you believe in the underlying fundamental value of your investment and you're looking to make money over the long term, not over the next 6 months, not over the next 2 years. And so if that is your goal, then you got to keep investing in your company, your ETF, because you're investing for the long term, not the short term. Here, if you're looking to make money quicker, if you're looking to be a trader, then you got to have your risk parameters in place. What happens that you got to sell? When are you going to sell? If your company falls more than 10%, you have to have the risk parameter in place. If you tell yourself that you're going to sell after it goes down 10%, you have to sell, because just because you made a smart investment doesn't mean it's going to go up. And so you just have to have your risk parameters in place and understand what rules you have set for yourself. This is something you have to do before you actually start investing, because if you start investing and then you start to set rules for yourself that, oh, I'll sell after I make a 30% profit or after I make a 50% profit, then what ends up happening is your stock goes up 30%. Then you say, Now maybe I'll sell it after 50% because now you're getting greedy. You see the stock shooting straight up and you think it's not going to slow down. I think it's going to go up 50%. Then at 50%, you're going to say, you know what, I'll sell it at 70% profit. And then it goes up to 65% and you're thinking just a little bit more and now I'm going to sell. And that's when things turn around and now you start losing your profits. And so you got to have your parameters in place beforehand, because when you start setting these parameters after you invest, now the emotion kicks in. You get greedy when things go up and you get emotional and you panic sell when things go down. You got to know when do you sell when things go down and when do you sell when things go up. When you're investing in real estate, especially here, you got to know what your goals are. For me, I got to make a minimum 7% return. And so when I look to invest in properties, I'm looking for an area where money is flowing to. So I can talk to the city, I'll do whatever other research I got to do to see where businesses are going. If I find an area that I like, that I think is going to be more valuable in the future, then I'm going to look for properties that's going to make me a 7% return. If it doesn't make me the 7% return, I'm not interested. I don't care what this property could be worth in the future because I'm not investing for appreciation. I'm investing for cash flow. Now, if I get appreciation, that's great. I want to find an area where the demand is going to go up because I want the rental values to continue to stay the same or go up. So I want to make sure I can continue this appreciation. And if I get the appreciation, great. But this is what I'm investing for, not this when I'm investing in real estate. So you got to understand the game before you start investing, because if you're just throwing your money around hoping you make money, well, now you're the one that's losing money, making everybody else money. The fourth secret that you got to understand when it comes to building wealth with stocks and real estate is patience. And I left everything here because you're going to understand how patience plays a part with this. Traders in the stock market and flippers in real estate make more money in the short term than investors do. But over the long term, the people that make the most money over the long term are the long-term investors. And so this is what you got to understand. What game are you looking to play and how are you looking to play? Because if you're looking to build wealth over the long term and you're looking to do that passively, you got to do this. Now, you can make a lot of money here. I'm not saying you can't make money here. You can make a lot of money here. But what you got to do is you got to take this money that you make here on the active side with your trading and you got to move it here into your long-term investments. And so if you want to build wealth, you have to understand that wealth is a long-term game. Yes, you're going to take your earned income and you're going to put it towards a passive income here. If you want to amplify that, you got to make more money. One of the ways you can do that is by trading money, being a flipper. Now, when you make this money here, you got to understand that no market stays the same forever. If you remember, we had 2020 stock market crash, which killed a lot of traders. We had the 2008 real estate crash, which killed a lot of flippers here. And so you got to understand, yes, there's a lot of risk here, but you can make a lot of money very quickly. And so once you make the money here, you want to keep it, which means you want to put it here because these investments are going to make you money over the long term and they're going to build you wealth for the rest of your life if you keep funneling that money here and here. Wealth is a long-term game. This is a marathon right here. This is something that you got to plan for the next 10, 20, 30 years. These are sprints. You can make a lot of money with these sprints, but you got to put them somewhere safe, which is the marathon. And so you just got to understand the game, which I just talked about, and you got to understand that the most money is made over the long term, over time. Because when you have time on your side and you have the patience to have time on your side, now you're letting your money grow and you're letting your money compound, which means your money is growing and the money your money made is going to be making you money, and the money your money's made is now working to make you more money. Your money's money. You know what I'm trying to say. And so it's all about compounding, but that only happens if you have patience, because the issue is we have a lot of people that are looking to make money very quickly. I mean, it's human nature. Who doesn't want to get rich quick? But when you are constantly focused on just getting rich quick here, and you do not have kind of that rational mind, you're just kind of getting greedy because you're looking to make money quickly. Now you're more susceptible for things to go wrong. And when things go wrong, now you're going to be the one paying the price. And so you got to understand what the game is, and you got to understand that if you want to build wealth over the long term, you need the patience, which takes time. And the fifth secret that you got to understand is you got to go all in when the opportunity presents itself. The common saying that everyone has is scared money don't make no money. When you see an opportunity, you have to be willing to jump on it. If you're the one that's just scared, sitting on the sidelines, you're not going to make any money. When the 2008 real estate crash happened, I was squeezing every dime out of me to buy as much real estate as possible because I wanted to buy these properties at a discounted price. When the 2020 stock market crash happened, I was buying stocks every time that the stock market went lower because I knew that this was another great opportunity. These things are going to happen again. If you missed the 2008 real estate crash, crash, if you missed the 2020 stock market crash, these things will happen again. Okay, that's the way the market works. Our asset cycles are cyclical. That's why they're called asset cycles. You'll see times when real estate goes up. You'll see times when the stock market goes up. And you'll also see times when these things go down. Now, this doesn't mean that you shouldn't buy them when things are going up. You got to be strategic. You got to be logical. You should buy things when you see good deals, because nobody can perfectly time the market. Nobody knows when things are going to go down. Nobody knows how far they're going to go down for. But when you see an opportunity, whether it's this way or this way, you have to be willing to go all in. Okay? You can read all the books. You can watch all the YouTube videos. You can buy all the courses. But if you're not willing to actually put your money to work, you will never have a chance to become wealthy. And the reason everyone's scared to do this is because they think, what if I lose money? Now, the easiest thing that you can do to get over that fear is just tell yourself you will lose money. Because the reality is, yeah, there will be times where you do lose money. You're going to invest your money in a stock that you think is amazing, and this stock is going to go under, you're going to lose money. You're going to lose money in the real estate market if you invest in real estate eventually. I even talked about my worst real estate deal ever on YouTube. If you want to watch that video, I'll link it for you in the description below. But if you go in with the mindset that your invested money is now gone, right? As soon as you invest the money, it just disappears, you'll be more okay with things when they go wrong. Now, you don't want to just keep losing money, okay? You will lose money eventually, but you got to use them as kind of learning tools. But you have to understand that, yeah, it's not going to be kind of riches overnight. And there will be times where things go wrong. But you have to be willing to put your money in. And if you use this as a learning tool, eventually you're going to make your money back plus more. And the loss was just your tuition, your kind of education fees to learn how to actually make money. But the only way you can do that is if you actually put your money to work and if you take that risk. Because if you don't take any risk, you're not going to make any money. If you enjoyed this video, here's the video on investing your money in stocks that I think you'll love. And while you're at it, download our free stock market PDF. And as always, keep hustling. But in the long run, what really affects the stock's price is its fundamentals. That's how much money is the company making? How are their profits looking? Are their revenues growing? Are their profits growing? How is the management, and are they innovating for the future? So these are the things that really affect the company's stock price over the long term.